I'm Dan Fitzpatrick at StockMarketMentor.com. Look, every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money, okay? We want to make some money. Well, look, good trading takes more than just punching the buy button on the stock you heard last night right after the opening bell. I want to look at these three stocks that I saw on TV today, and let's see if we can make some money. Okay, first up, Tesla. Okay, Kramer took this as part of a question and answer, and somebody was asking him about this. He basically said, look, I can't get behind the stock. I don't get it. I don't understand the valuation, but I'm not going to stand in the way of the buyers because the stock just really trades strong. Okay, that was his take. On Fast Money, they were doing a fake out versus breakout, and they all basically said Tesla was a fake out. So the sentiment is really kind of, among the guys on the desks anyway, it's kind of negative on this. Okay, that makes me wondering about perhaps taking the other side. I agree that this stock has moved up quite a bit. I'm telling you, this chart is, if you're long, you were long the whole time, great. Just know this. This is where resistance lies. You move this out to here. You can see this is just getting into the danger zone, but it's done it before. So here's my suggestion. I can't buy this stock right now either. It's just pushing right up against 220, which is an obvious resistance level. This is the 200-day moving average. That's also an obvious resistance level, which held it back several times. It's also moved up from like 145 up to 215. That's been a heck of a move. So there are a lot of things to not like about this stock if you're entering, if you're just looking to buy. I can't buy it here. If you want to go ahead and do that, fine. But do this too. Take a moving average, make it like an 8-period moving average, and protect your profits that way. If this stock starts falling below, like right now, the 8-period moving average, that level's 205. So if the stock starts falling $10 below this 8-period moving average, which is basically defined support with a little bit of room, if it starts falling below 205, then go ahead and ditch it. Okay, that's how I would trade Tesla. Would I short it? Absolutely not. Though I actually have shorted it before in the way of bear call spreads with varying degrees of success, full disclosure, or failure. Tough stock to trade. Anyway, so that's it for Tesla. Now let's look at a couple things that Carter Worth was checking out on Fast Money. Here's what he was looking at in the financial sector. Citigroup, left shoulder, head, right shoulder, neckline, kind of a classic reversal, head and shoulder, inverse head and shoulders, upside down head and shoulder pattern. So if this is at 35 bucks and this high is about 42, what's that? $7. So you take that $7, the distance between the low and where this neckline is, which just simply connects these two things. If you take that $7, add it to 42, you get a target of 49 bucks. That's the way I would be trading Citigroup. Now, he was actually looking at it on a 30-minute chart and was seeing the same thing. Honestly, I just don't think you have to do that. I don't trade in 30-minute charts. I trade in daytime periods, so I don't even think you need to see that. The other stock that he was looking at is Morgan Stanley, and guess what? There's the head, there's the left shoulder, and you can look at this as the right shoulder, or you can even look at this as the right shoulder. I just don't think it matters. It does matter in terms of the slope of the neckline, because if this is the left, or this is the right shoulder, this is the left shoulder, then you have to look at this as being the intermediate point, and this as being the intermediate point. So you set these two points as the neckline go from 21 up to, we'll say, 25. So you got a 4-point move. But then as far as measuring where you're going to go, you have to start at where the breakout was, which we'll say that's 24, whatever. So that's your neckline. That's your targeted move, right about 29. Now, on the other hand, if you do it this way, which is, I think, the correct method, and look, at the end of the day, all we're doing here is managing risk. We're not doing anything else. That's the neckline there. So now we go from 21 up to, say, 26 or so. And so that's 5 points, and we don't even have the breakout yet. So if the stock breaks out above 26, now you add 5 points to that and you get 31. I like that better. I like having a $31 price tag, price target on a $26 stock. That's the way I would trade Morgan Stanley. That's the way I would trade Citigroup. Same thing, okay? All right, I'm Dan Fitzpatrick at Stock Market Mentor. And by the way, I'm hosting a question and answer session at Stock Market Mentor for everybody. If you want to belong, if you want to join that, make sure you're on our free email list. And if you're not, just go to Stock Market Mentor and you'll be able to sign up there. But it's a free question and answer session on Wednesday at 8 p.m. Eastern Time. Hope to see you there. And if you want to, you can email questions to Gary@stockmarketmentor.com, and we'll be able to take a look at them. All right. Have a great evening.